about audit. So, and you can see the units are so much. I don't know how we're going to run through this in 1 hour, but then we shouldn't run and miss the most important aspect of the module or the chapter. So let's take our time, but we have to be fast. Actually, we don't have that time. So we have about 9 units. We have audit testing, audit documentation, related parties, written representation, using the work of an auditor expert, using the work of an internal auditor, ISA 610, the auditor from accounting estimates, and Unit 8 is the audit of specific areas of the FS, and Unit 9, transactional cycle. So there's 9 units, so we need to look at them one by one. So please interject, because these are intricate areas of your exams. He must, take note of my word, he must test it, because this is everything about AAA. Everything about AAA boils down on evidence. If you don't have evidence, you don't have an audit report. So he must test this area. So please take note, but I'll try to be fast. And I like my breaks. My breaks in this class mostly is Julie. You just say stop, 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 go back, go back. Just like my CEO in the office. If you are doing a presentation and you are fast, you say stop, 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 go back, go back, go back, go back. So please, you are permitted to do that. Exactly. Okay. You are permitted to do that. Once I'm speeding too much, or you match the brake, say stop. Yesterday I liked Aisha. Aisha will say, sir, stop, stop, go back, go back, go back. When you are not in the class, good. In case like that. Yeah, so please, I may be running with too much speed considering the time you have, but please catch what you're supposed to catch and what you need to understand. Interject very, very freely, and I'll be happy to stop. Okay, so let's go by way of Unit 1, audit testing. Audit testing is very important because you don't take everything at face value. And audit evidence is information used by the auditor to form the basis of your report or your opinion. So you have the accounting records, the financial statements, and other information that needs to be supported or added together to have evidence. So what's the basis of your report? This is the evidence. In any audit, you don't audit based on, okay, I understand their processes, and based on what they told me, I'm preparing my report. No. So you must have physical evidence documented that these are the accounting records given to me, and these are the other information that back up this record. And I'm very, very okay with this sufficient, reliable evidence that nothing has come to our attention, that anything has gone wrong with the financial statements or our report, or the true and fair view of the organization's financial performance and position as at when I'm reporting this audit report. So essentially, evidence is about your information used to come about those opinions. So audit tests includes procedures you carry out to have those evidence or to gather those evidence, and this is very important. So it's like, how do we know you understand the subject of AAA? You have to be tested on the day of the exams, and that is very important for audits also. How do you know the organization did what they said they did in the financial records or financial system? You need to test. And so there are procedures for testing, and these testings culminate in audit evidence. After you've tested, you now have your evidence. So just like we're going to write the exams, and the ones you have passed, they tested you and they had evidence that you wrote what is expected, and you passed above 50. That is exactly what audits is all about. So you test accounting records, you test procedures, you test processes, you test adherence to policies, and you test financial transactions in the financial statements, the performance statements, the position statements, the cash flow statements, to see that they are correct based on the movements and the postings. They are correct, and that's what the test speaks to. So you also test controls. You evaluate the effectiveness of internal controls, looking at control environment, looking at risk assessment, looking at control activities, monitoring, and what's the last one? Information and communication. So you test those controls to see, do they actually work? You also test details. You examine individual transactions and balances, and often mostly you do samples, but when those samples have a problem, for example, you are sampling 10 invoices and there are about 1,000 invoices they posted for that year. You sample 10 invoices and you are looking at the three-way match. Three-way match looks at purchase order, goods received, and payment, which is invoice. So when you're doing three-way match and you are testing 10 invoices, and if you've tested 3 ways and you've checked that they follow the PO process, they receive the goods and they want to pay, and those 10 invoices are okay, then you notice there's a compliance pass, a compliance test pass. You may not be able to go into substantive tests. So from those 10 samples of 1,000 invoice, you can validly say that these people are following the process of the three-way match system. But where you have those 10 you've tested, out of that 10, 5, they didn't go through the PO GRV system, you just saw invoice payments, then you have to test detail. You have to go further than 10, maybe you go 100, 200, to see that, okay, how many substantively have they boycotted that three-way match system? And that's where your curiosity and professional skepticism comes in. So, test of details, you start with sampling, and depending on the result of your sampling, you may need to go into detail. And we have 2 types of those tests. We have compliance test and substantive test. So compliance test looked at the sample and the amount of accuracy in those few samples. And if those few samples, you have significant discrepancies, then you may have to go to substantive testing. Very important. So audit sampling is...
Excuse me, test of detail and subtracting testing, are they the same?
Yes. In those actual words, they are the same. But then when you look at sampling, if you want to add sampling, you may not call sampling test of details. You just call sampling compliance testing to see a few. But when you want to go in depth, you can call it substantive testing. Yeah, so in answer to your question, yes. Test of details looks at substantive testing, yes.
Now, please, what is the three-way matching system? You mentioned that like twice in the...
Okay, fantastic. Yeah, fantastic question. So the three-way matching system for an organization that wants to pay for a service or a product. So the first process is your purchase order. So the purchase order has to be raised to ask for... A purchase order is a document that states, okay, we want to buy, and these are the details of what we want to buy, who raised it, who verified it, who approved it, signatures are on the purchase order. So it's a system that helps you in procurement to ensure that processes and procedures are followed in purchases and procurement. It's called procure to pay when we are doing auditing. So the first document when you want to buy is PO, and you must follow that process. If you don't follow that process, then you have cut short due process. So the first thing is PO, that's the first document. And when the PO is approved, the PO is given to the supplier that, okay, the organization has requested you supply those products. So when he supplies with a delivery note, and the organization receives that product or service with the delivery note, and they raise a goods received note or a goods received voucher that I'm validating that I've received these goods and is in line with what is on the purchase order. So if the purchase order says supply 5 liters of total oil, on the GRV and the delivery note, the man actually supplies 5 liters of total oil at a particular price. So both of them must match. Then when finance wants to pay, they use that delivery note and the GRN and the PO to pay. So the invoice, what we call three-way match, is the PO should match in quantity and in value. The GRV should match in quantity and in value. The invoice that you want to use to pay that supplier should match in quantity and in value. So if there's a discrepancy, auditors will flag it. The PO does not match the GRV and the GRV does not match the invoice. But where 3 of them match based on quantity, value, and the approvals, you can decide to let it go that due process have been followed, no discrepancy or irregularity has transpired. So that's what three-way match speaks to, and that's what internal auditors verify, and also external auditors do a form of compliance test to see if these procedures are followed. It's a global standard, and it's a very good way to match POs, expenses with payments. I hope that's clear.
Sir, what's GRV, please?
Sorry.
Goods received.
Goods received
Goods received voucher. Some people call it goods received note, but some electronic generated documents call it GRV. So we use Sage currently. Sage 300 calls it GRV. But I've worked in a company where I used a software called Visual Dolphin. Visual Dolphin called it GRV. So it depends on the system. Yeah. Aisha, I hope that's clear a bit.
It's perfectly clear.
Oh, fantastic. Okay, so let's go on. Let's move on. I like the class. It's very engaging. So we're looking at sampling, audit sampling. You're applying procedures to less than 100% of the population. Just like I spoke to, you have 1,000 invoices and your time cannot permit you to test all the 1,000. So you have to test less. So you can do 10%, 20%, depending on the time. You are giving all units a chance of selection. So out of that 1,000, you can just randomly look at the values and pick 10% or 20% to test. That's what sampling is all about. Then analytical procedures, you evaluate financial information through plausible relationships, not typically sample-based now, like you are looking at in detail. You may not be 100%, but maybe 80, 90%. You analyze to see that the relationship between those transactions are related. And out of that 80%, you could derive evidence that, oh, these people have followed the process 80%. In every standard, by every standard, if somebody does 70% in an exam, is distinction. So if you've tested 70% and you find out, these transactions are matching, like the three-way match system in your analytical procedure, if you've done 70%, you can tell yourself, oh, from the audit, I may not kill myself to do 100%. Because one thing you must understand in audit is time. You may not have time to test all the transactions, but you should be able to do some test, analytical procedure to give yourself a level of comfort that substantially these people are following processes. You must understand in audit, you cannot have 100% audits. You cannot have an organization that does 100% following of processes system is not possible. And that's why auditors are there to check. No system is perfect. No human being is perfect. But substantially, significantly, processes should be followed. You can never say there's no fraud in the system. That's the ones you see are what you are reporting. What of those you don't see? And that's what audit is about. So have substantial comfort that your evidence is okay, supporting the fact that this organization has followed processes substantially, and that will form the basis of your opinion. So analytical procedures is evaluating the information substantially. You may not typically sample, but at least go beyond 10, 50, 60. If you are 70% okay, that the analytical procedures you performed on those documents are fine, please move ahead from that particular scope. Now we look at substantive
analytical procedure. Can you give me an example of, because the way you described it right now, it hasn't sat well with me. So can you give me an example of analytical procedure, please?
Okay, fantastic. So like I said, sampling, we want to look at a few, 10, 20%. So analytical procedure is not sample-based. Typically, you might go 50, 60% in analytical. So for example, you have 1,000 invoices. You may have to test 500. And that's where data analytics come in. AI has come to help us. So if you want to test 500 transactions and you want to do three-way match, you need to have the POs, the GRVs, and the invoice. And you want to test analytically, let's say 50%, you have to scan all those invoices and impute them into a data analytics software or an AI machine to help you. So it will scan through, because humanly possible is not easy to, or very seamless to carry PO1, you check all the amount, you check the value, you check the GRV one by one for 500 transactions.
It narrows the scope of the testing.
Exactly. It narrows the scope. So where you may have to test analytically up to 50%, you may have to use machine learning, data analytics will help you to do that seamlessly. Yeah, so it's not full coverage. It's like half coverage above the audit sampling percentage. Exactly. And that brings us to substantive. So substantive procedure now is in line with your question, is test of detail. So where you've your analytical procedures of about 50, and you still have 25% discrepancy, you may have to substantively test the procedures detail. You may have to go more than 50% to even 100%, because there are discrepancies from number one, your sample, you did 20%, you have significant issues. You move to 50% analytical procedure, you still have issues. Then you may have to test everything. If you test 1,000 transactions and 500 have issues where they have not followed processes or procedures, or some documents are missing, then you have to flag it. And that's what determines what procedures you should carry from your sampling to your analytical procedures, then to your substantive procedures. This is very important. So you have to have that level of comfort that these people are doing the right thing substantially. So if somebody makes one or two mistakes, it's understandable, you're a human being. But we're out of 1,000 invoices, 500, you didn't see PO, you didn't see GRV, you just saw invoice. Your mind should start telling you there is foul play here. There's foul play. So why didn't you people provide POs and GRVs for 500 invoice? That's 50% of the sample or the population. So you have to be pragmatic, you have to be smart in doing your audit work, know when to flag things. But out of maybe 500, you see there were no 5. You ask them and they were like, hey, we are still looking for it, we will submit it. Those ones are ignorable, and depending on the amount on the invoice, out of 1,000, you can see 5. They are immaterial. Exactly. So like I said, you cannot have 100%, but then there are some that are ignorable. But out of that, maybe 5, there's an invoice that you saw about 2 billion naira on that invoice payment. And there's no PO, there's no GRV. That one is immaterial. That one is not immaterial, I beg your pardon. It's very material. You are making a payment of 2 billion naira on one invoice, and you didn't see PO, you didn't see GRV. So who approved that transaction? So you have to call it out. So materiality, like Aisha said, is very important in your auditing. As you are doing your sampling, make sure you are checking the values and you ensure that material figures are flagged so auditors' liability don't fall on you. So that's a brief on audit sampling, test of analytical procedures and substantive procedures. So ISA, yeah, please go ahead.
No.
Somebody's trying to interject. Oh, okay. I thought someone is trying to interject. All right. So ISA 500's objective is to obtain sufficient, appropriate audit evidence. Every AAA student knows this slang: sufficient, appropriate audit evidence. When we are writing AAA, if you don't know this slang in ISA 500, then you have not started auditing. Because I wrote AAA 2 like 3 times before I passed it. It was a challenge for me too. Because that time I was in financial reporting, I didn't know much about auditing. If I were to write it now, I'll write it 3 times. I'm serious. So
wait, do you think this is my first time of hearing this? Obtain sufficient, appropriate, or is my first time of hearing it?
Oh, really? It was a slang then. Aisha, do you know this slang?
Yes, I do. In fact, my lecturer used to sing it in my head.
Because me, I know
it's a key word in audit.
Exactly. It's a key phrase. Obtain sufficient, appropriate audit evidence. Yes.
Obtain sufficient,
appropriate audit evidence. That phrase is a slang. If you don't know how to sing it, then you have not started auditing that time when we were writing it. I'm telling you. So that's ISA objective, ISA 500's objective. You need to obtain sufficient and appropriate evidence to be able to draw reasonable conclusion and form an audit opinion. So you don't form an opinion based on whatever is in your head or hearsay or based on what you've seen an organization do. You form it based on sufficient, appropriate audit evidence. So Julie, begin to sing the song with me and Aisha now. Obtain sufficient, appropriate
audit evidence.
Exactly.
Obtain sufficient, appropriate audit evidence.
Exactly. It's a well-sung song in audit. All right.
Yeah,
so that's nice. So let's go to financial statement assertions. So every representation by management about financial statements, their transactions, and the events on their income statements are supported by ISA 315, they must occur. So take note, every financial statement assertion, whatever they posted on their income statement based on ISA 315, number one, the criteria is it must have occurred. Not that you bring transaction that did not occur and you put an amount. It must occur. Number two, it must be complete. Number three, it must be accurate. And there must be a cutoff. There must be classification and presentation. So the occurrence comes to the validity of the transaction. There was a posting. You people, you purchased and you received those goods and you invoiced. Occurrence. And based on that occurrence, there must be completeness. The PO must be complete, the GRV must be complete, and the invoice must be complete. And there must be accuracy. No dichotomy between the values and the volume on those documents. It must be complete. And there must be cut off. Whatever you did between 1st of April and end 30th of April, there must be a cut off. Not that between 30th of April and 1st of May, there was a transaction. No. So if you are doing a monthly transaction, there must be cut off within the month, cut off in a quarter, cut off half yearly, and cut off yearly. From January to December, this is the transaction. There is 5,000 invoice. Not that between December and January, the company did not close. There's nothing like that in audit. You must establish a cutoff in the accounting period as chosen by that financial statement. So if you are doing January to December or March to February, there should be a cutoff period, and that is what it means. So you must test that these criteria has occurred. Then classification. When you are posting an invoice as an expense, we shouldn't see it in asset account. For crying out loud, how can you see an expense that you bought things and we are seeing that as an asset posting? That is a wrong classification. Or you want to post goodwill, you post goodwill as a tangible asset under PPE. For crying out loud, goodwill is not a property, plant, and it is wrong classification. So everything that is posted on the financial statement must be classified correctly. Then the presentation. You cannot present an asset as a cash flow from operating activities. So there are standards, and these are the checks accountants must check. So presentation, whatever is in the income statement, in the position statement, and in the cash flow statement must be classified and presented correctly. Then, very importantly, account balances. Account balances must be tested all through the year. So the beginning period and the ending period should tally, especially in the SFP, looking at inventory, receivables, payables, prepayments, accruals. You see that external auditors don't play with those account balances, even internal auditors, even though we have limited scope anyway in looking at these things. So this is very important in ISA 315. Financial statement assertions must be correct substantively, significantly. The occurrence, don't forget, completeness, accuracy, cutoff. Accuracy may not be 100%, but at least 70-80%, that whatever you tested are accurate. Where you have significant dichotomies, differences, then you need to probe further. Classification, presentation. So these are ways you present your thoughts when question comes like this, because definitely you find exam questions like this. This is what the audit is about. And audit evidence is very wide. So in every exam, he must test this place because this is what you actually do. Then also the existence of assets mostly. The rights and obligations of the company to own those assets, completeness, the accuracy of their valuation. What are they valuing your property, plant, and equipment as on a yearly basis, apart from the cost? Because remember, there's depreciation, and depreciation will be reducing the how do I put it now? The lifetime or life cycle of that asset. Then how is the allocation and the classification presentation, especially for those assets? So the existence of the asset must be cited. And that's why when you are auditing, you don't just take the financial statement, you go to the site where you see heavy assets. Are they existing? Do they have the right? Because some will claim right to those assets and they will actually leased. If you lease the asset, it's not your own. So if they bought it, it's their own. So the right and obligations to those assets, the completeness of their postings, the accuracy of valuation. Some used to value their asset upwards, downwards, allocations, classification, presentation. These are very important for the statement of financial position items. Then we look at management experts. The auditors assess competency of the capabilities, objectivity, and the terms of engagement, the assumptions, methods, and report on management expert. So they may seek additional corroborating evidence that the experts management used to prepare this financial statement. Those experts are competent. So there are situations where management use experts to prepare financial statements based on a lot of lack of knowledge on their part. So they use experts to prepare those financial statements, and those ones need to be assessed. The experts the management team use, the auditors need to assess their competencies, their capabilities, their CV, what they've done, and the reports they prepared. So you need to have evidence too based on the management experts used for the work.
Excuse me, sir.
Yes.
Excuse me, sir. I say 500. You said it's obtain sufficient, appropriate audit evidence to draw reasonable conclusion to form an audit opinion. And he also stating here, expert. Go back to slide. Management expert. Is it also ISA 500?
Yes, exactly. So the management, the ISA 500 now covers a lot of areas. So you need to obtain appropriate sufficient evidence to draw conclusion. Management expert, getting evidence on the management expert use is still part of ISA 500.
So okay.
So the evidence from management expert, their competency, their objectivity, and how they were engaged is also part of ISA 500. So your evidence permeates around several areas, not just to obtain sufficient evidence from the work, but also obtaining sufficient evidence from management experts that were used in the work. ISA 500 covers it extensively. Yeah. So sufficient evidence in quantity means you need enough evidence to support your conclusion, which is influenced by materiality, like Aisha said, and your risk. So you cannot just have scanty evidence and say, based on this scanty evidence, I've come up with my conclusion. The scanty evidence may not be enough. And when you see the FRCN coming after auditors, or in another country, in the UK, in the US, they come after audit, they are asking you, what is the evidence that supports your opinion or your decision based on what you audited? So if the evidence is not sufficient, then auditors are liable. And that is why your evidence must be sufficient. It must not be scanty. It cannot be very low. So you must have sufficient evidence to support your conclusion, and it must be influenced by materiality of those transactions. Very important. So one invoice, like I said, showed 2 billion. And you said because that invoice is a low percentage of the total population you are sampling, man, that's not sufficient evidence. So if one invoice carries that kind of heavy materiality, you need to stop and say, hey, please, why is there no PO? Why is there no GRV? And you are paying 1 billion. That is material, very, very material. So appropriate evidence is qualitative. It must be reliable and relevant evidence. So it's very important to take note of this. So sufficiency is based on quantity and also quality, and it has to be appropriate. So wherever you will be questioned, you should be able to defend yourself as an auditor that, okay, if somebody else reviews this work I did, will they be able to have the same level of comfort I have? And that will help you to be able to sit down and get sufficient evidence in your work. Also, the reliability of audit evidence generally higher when you obtain it from independent external sources. Exactly. So an organization is owing somebody maybe 2 billion naira, and you ask, which vendor is this? They say so vendor. You now say, okay, why are you owing 2 billion naira? You say, well, we will pay next year. We are trying to organize the invoices and the payments around it. You need to verify from that vendor independently from what was posted. You cannot take it from face value what the management team told you. So independent external sources are very important, especially for balances at the year end. That's where management may be able to hide some transactions. So what auditors do is to get reliable evidence, they write those external parties and document their evidence. Okay, dear so company, we are external auditors who want to validate that we are supposed to pay this closing balance of 2 billion. Can you write us independently of management? And it's part of their work. So what are you doing? You are providing independent external source and evidence that the transactions and the balances tally with what was posted on the financial statements. So where they want to hide debts and you didn't verify, and the organization said this is their debt exposure, and you didn't verify that, okay, they owe these people this amount, and you took that hook, line, and sinker. If the organization files for bankruptcy, they may need to go back to the external auditor to say, but you said you did the work, and from your conclusion, you issued an unqualified report. Why is this company going down? And that is where your evidence comes. So it's very important that there's documentary form, and it should be original. Originally preferred means you get it from the source, not from management. This is very important. So procedures for generating audit evidence. Inspection. Like I said, go to the site and cite the tangible assets. When you bring a GRV to me to sign as internal auditor, you will see on my documentation either verified and is with green biro or cited. If I didn't cite it, to be red biro, not cited, and I will sign. So go there and cite the assets. Look at the asset register, cite it. Get the records, the documents, and cite. See what you are taking as evidence. It's very important. Observe, watch procedures, let them walk you through. So these are the process of generating evidence. And don't forget, anything that is not documented is not done. It's not evidence. Okay, I heard, they told me, that is not evidence. If it is not documented, it is not an evidence. Very, very important. Inquiry. You need to seek information. External confirmation from third parties is covered in ISA 505. So external confirmation is very important. Recalculation and checking of mathematical accuracy is also very important in doing your evidence work. So apart from what they posted on the financial statements, you need to match them. So most auditors and bigger audit firms have audit softwares that match this mathematical accuracy, like IDL, ACL. They are powerful softwares that do that for you so that you don't do manual work and waste time. Also, reperformance, independently executing client procedure. So you independently pick their processes, systems, their SOPs, and execute it yourself. You test it to see if it works based on what management has told you. So these are ways you generate your audit evidence. Also, analytical procedures, like we said, you are evaluating financial and non-financial data and the relationships. We've spoken about that. And directional testing is another way of obtaining audit evidence. Audit approach based on double entry bookkeeping. Softwares, Excel has helped us to be able to close this gap where you have to sit down with books those days to be doing debit, credit, double column cash book, triple column cash book, all those things we did in secondary school. Now softwares has helped you annihilate all this wahala. So double entry is done by the software. You just check posting negative, just post it to do your credit and debit for you. You don't have to do the manual work. Also testing of debit asset, like I spoke about, overstatement, confirmation of existence, you walk back and all those things. Mostly softwares AI now has mitigated all this wahala for us. Testing of credits, those were traditional ways of doing auditing then. But now softwares can do all this very seamlessly and accurate without any human effort. So the test of credits, liabilities, income for understatement, confirmation of completeness, you trace forward from source and all that. Also, sampling based on ISA 530 provides a reasonable basis for conclusions. A reasonable basis for conclusions. So, this basis for conclusions from the population is very important because if you do statistical sampling, random sampling, probability theory for evaluation and risk measurement to help you to know whether you want to probe further, do test of details or substantive testing. So sampling is very important to know how to carry out your work. The non-statistical sampling is judgmental sampling based on the auditor's professional judgment. But then this method is risky. The entire set of data needs to be sampled and it should be appropriate and complete. So if you are using your judgment, then your judgment must be correct. You have to be very careful. So statistical sampling is much more recommended than non-statistical, that is judgmental. So it's very important to take note of this in carrying out our work. So for sampling units, the individual item in the population is considered. Out of 1,000 invoices, individual ones are very important, and each one, based on their materiality or the amounts of them on them, should capture your attention. So there are tolerable misstatements. Like Aisha said, some are immaterial, so you could tolerate some. The monetary amount acceptable without causing material misstatement is possible. So, for example, you see in the cash and cash equivalent that the total of the cash and cash equivalent in the current asset area of the financial statement is, let's say, 1,000 naira. And you tested and found out that out of that 1,500 was not there. It will not influence a total asset value of maybe the asset side is 2 billion, liability is 2 billion, that balances. So 1,000 may not affect it, 500. So that is tolerable. But you still need to ask that out of the cash we counted, we are not seeing 500 naira. What happened? And they'll now say, okay, they've not raised voucher for that petty cash. So that is tolerable. It's a material misstatement. But where out of an asset of 2 billion, debit and credit, balancing both of them 2 billion, there is a transaction maybe on your receivables that is showing 100 million naira receivables. No. That is a misstatement that you cannot tolerate. What happened to the receivable of 100 million? Even 50 million is material. You need to call that out. And that is tolerable and intolerable misstatement. So your tolerance rate of deviation is also important. The rate of control deviations acceptable without concluding misstatement is based on the amount, the size, and the significance in the financial statements. This is very important. So your analytical procedures should always come when materiality is questioned. And that's what ISA 520 speaks to. Where you have issues with sampling and some figures, your analytical procedures have to come in. And that involves evaluation of financial information through plausible relationship. Look at the movements. What are the cause of those dichotomies? And what's the purpose? Is to assess if reported figures make sense. If those figures they report make sense, fine. If it doesn't, your professional skepticism should come in. That's the purpose of the analytical procedures. You assess if the reported figures make sense. And if it doesn't, please investigate anomalies, flag it to management, what is happening. So you also compare with prior periods, budget, forecasts, predictive estimates, industry averages, and you are doing this comparison to see what has happened in the past, what is happening currently, and also what could happen in the future. And the relationships between the financial statements items like the gross profit margin, the net profit margin, and also non-financial data like payroll costs per employees could help you get evidence on how the movements of these financial statements and how they've been prepared. So they are used at planning and the substantive procedure stage. So if it's efficient and effective, the overall review involves investigating unexpected changes and also corroborating those explanations to have that level of comfort that I've tested it and is correct, whatever it is I've investigated. So there shouldn't be any issues with your testing. If you have issues, you need to flag it to management. So the extent of use is also dependent on the suitability, the precision of your expectation, the reliability of the data provided to you, and the acceptable differences should help you determine what to use in those financial statements, especially from experts and from the management that has been presented to you. You need to be very, very cautious of what to use and what to question. And the materiality threshold should drive that decision. Also, investigation of fluctuations. Every significant unexpected changes require inquiry and corroboration. So investigate any fluctuations, any differences, any figures that are not tallying, that don't make sense. You need to speak to those changes and call them out and let management defend themselves. So generally, that's what audit testing speaks to. It's a long unit and is frequently tested in the AAA exams. because this is where the field work is carried out. Okay, so this is 9:23. We've spent so much time because this is an intricate area. All right, do we have any questions on audit testing? Any question? Any question? Is Aisha still on the call? She's unusually quiet.
I'm here, not from me.
Okay. Julie, are you okay too?
Okay, I'm fine. Yeah.
Okay, fantastic. All right, let's move to Unit 2, Audit Documentation. I think after this Unit 2, we need to take our eyes off the screen a bit. And I'll also indulge us if you can allow us add additional time since we started a bit late to our 10 p.m. cutoff. I don't know if we're allowed or permitted to do that.
We no longer stop at 10 p.m.
It's okay.
At times it starts to 10:30.
Yeah, at most. She said we no longer stop at 10.
Exactly. Well, it's okay. It's fine. It's even you I'm feeling for because you have to go home. You know, we are home already. So.
Yeah, no, it's fine. Me, I'm okay. Exams are drawing close. So the more it draws close, the more I'm afraid that we've not covered. We are just halfway through the study text. So we still have 8 more chapters to go. That's what is driving me. I'm not going home or not going home is not the issue. My issue is for you guys to be imparted and get what is necessary to pass AAA and let's celebrate by June. That's my concern. Okay.
So.
Thank you for that. Amen. Thank you for that. Those kind words. So let's look at audit documentation. Let's look at audit documentation, ISA 230. All right. So audit documentation speaks to working papers, which is part of your evidence. So working papers includes digital papers, physical papers, record of your audit procedures, the evidence obtained, and your conclusions reached. So when you hear working papers, you think it's just hard copy A4 paper or no. Working papers could include PDF documents, Excel, PowerPoint, Word documents. In fact, now that auditing has been digitized, all the sufficient evidence you have are all electronic. So working papers could be hard copy, it could be soft copy. Mostly these days, the soft copies we have. The purpose is to support the audit report, exactly. Evidence of audits conducted per international audit standards and regulations. So your evidence and your working papers must be standardized based on ISAs, not just local standards or global practice, best practice. The ISAs must be followed. So supporting the audit report, the evidence of the audit conducted by ISAs and regulations must be fostered. This is very important. It enables an experienced auditor with no prior connection to understand the work. So when somebody picks your work to evaluate, to learn from, or to even review, based on those standards globally, you should be able to connect to that work and understand it. And that's the essence. So it enhances audit quality, those are the benefits, and it facilitates external and independent reviews and evaluations. This is very important. It also assists in planning and supervision. Audit documentation also helps ensure team accountability. So record matters of continuing significance also is another benefit of documenting evidence. It also enables quality control, reviews, and inspections from external parties. So don't forget there are regulators in form of maybe FRCN that come once in a while to check. So your audit documentation should be intact based on ISA 230 and make them follow through what you've done based on international best practices. So the form, the content, and the extent, like I said, paper, electronic, or other media in the audit file should be there. So don't forget the extent, the form, the content, either paper, electronic, or other media in the audit file are documentary evidence. So it varies based on the client and the audit complexity. And this evidence or the documents you receive depends on the complexity of the audit and the nature of the client. It includes audit programs, analysis, summaries, confirmation, representation letters, checklists, correspondence. All these are forms and content of documents you could receive. The audit programs, your analysis based on the financials, summaries documented, confirmations external and internal, representation letters. Those are letters you send to management to be able to answer your audit deficiencies or questions. Those are representation letters. Then checklists you use to perform maybe your inventory count, your cash counts, receivables, all those checklists, they are all evidences. Another correspondence, mails between external auditors and management are all documentation of evidence. So there are types of audit files. There's the permanent file. Permanent file is an information of continuing significance. So the permanent file have these documents like legal constitutions, loan agreements or contracts, the history of the firm, MEMATs, memorandum of association, articles of association, the accounting systems used, prior year financials that are reviewed and updated regularly. So this form the permanent file. And we have current files, information relevant to the current year you are auditing, the financial statements, internal audits, reports, adjustments in the financials, the planning documents, the control materials, audit letters, work done in each audit area. So these are current files that you need to have as audit documentation. And also the contents of working papers per audit area. You look at the client's name, the accounting date, the file reference, who prepared the working papers, who reviewed it. So all these must be in place as evidence. The errors, the omissions, the auditor's conclusion based on everything that has been done during the work must be documented as your working papers, whether digital or paper. Also, the final audit file assembly, timely after the audit report's date, the final audit file must be within 60 days. So it excludes draft and preliminary thinking. So this is the final audit working paper. So drafts are reports you prepare and send to management to respond. Then the final audit paper is having its own special file that this is our conclusion on the audit. And this, you cannot delete the assembly until retention of at least 5 years from the audit report date. So what does it mean? In 5 years after you prepared your report, that audit report must stay valid. You cannot delete it or get missing. So there must be copies, there must be backups to ensure that in 5 years, that audit report from the date you issued it is in place. And this is very, very important. So there are modifications after the final report you prepared or assembled, the document showing when, by whom, and the reasons for the changes. So whatever you are modifying your report for any reason, it must be also documented that, okay, based on what we've prepared before, we are modifying that report based on this reason and based on these documents or evidence. So exceptional circumstances after audit report is that wherever you have exceptional circumstances that needs to adjust or be imputed in the report, you must document circumstances. Any procedure or evidence you have based on any conclusion must be documented, and how it impacts the report and changes your documentation. It must be signed by who, when, and who reviewed it. And these are for exceptional circumstances. Also, computer-generated working papers like softwares for analysis, lead schedules, draft financials. The advantages is that computer-generated audit papers are neat. They are not like physical hard copy, and it reduces human error. It helps or facilitates remote review, and most auditors are auditing you from afar, but because of the accuracy of the financial statements, most of the times they don't even come physically to site. And the time and the cost savings based on the work helps you, and that's one of the advantages of the computer-generated working papers. Also, the ownership, the custody, and the confidentiality of those documents are very important. The audit firm that does the work owns those working papers, and the minimum of their retention to those documents is 5 years. It should be kept safe and confidential, and disclosure only is to be disclosed on ethical guidelines, or you are prompted by law On no ground should an auditor, external, disclose information he received from those working papers, because it will be a breach of confidentiality. It's very important. Okay, so that's it for audit documentation. I believe it's precise, concise, and comprehensive. I don't know if we have any question on Unit 2. Any question?